I think we all knew it was going to be a slow January. I don't think any of us knew it was going to be this slow.
Well, last month marked the first time in 5 years that the average selling price of a Toronto home was less than $1 million.
This hasn't happened since 2021. The average GTA home price dropped below $1 million.
The downturn that we've been seeing in Canada's housing market.
Highest likelihood is over the next 6 months, things will just get worse. So all early signs are for another terrible year in pricing.
For the first time since 2021, the average home price in Toronto has dropped below $1 million. Mortgage rates have stabilized. Inventory is at a record high. So why haven't buyers started buying? Well, in 2026, there's something that's worth more than cash now. Confidence. And I think we're all going to see in 2026 how much consumer confidence affects the market. Let's get into it. So it is what it is. Yes, I know it's the month of January. I know Januaries are always slower. However, this January is the slowest it's been in 16 years. This is slower than the 2008 financial crisis. This is also slower than the pandemic scare that we all had in 2020. So prices are lower, which is a good thing. Why aren't buyers buying then? You can't buy something you're not confident in. And nobody in Canada right now is confident in purchasing or investing in the real estate market. Let's take a quick look at the numbers here. 3,082 total sales in all of January. 17,975 total listings. That's not a very good ratio. The average price now is at $973,000. We're finally under 1 million. I told you this would happen in my last video, the December report, and that headlines would be all about under the 1 million. Well, here we are. Now, if you want to take a look here, you could pause it, just take a look at the chart. It's just going to show you the active listings that we've had compared to sales in January. And you're going to see a huge shift upwards with active listings. So why is that? Why does nobody want to buy right now? Well, I think you have to take a look at the broader economic outreach. People are worried with what's going on with politics. People are losing their jobs. Construction is at an all-time low now. That whole field is suffering with job loss and unemployment. How can you spend money if you're not making money? Now, I do think there's going to come a point, as prices are falling, where consumer confidence is going to peak back up, because somebody will buy a house if they were given the opportunity for $2. I know that's an extreme example, and your consumer confidence would have to be beneath the ground to not want to buy a house at $2. But once prices do get low enough, it'll balance out with where the confidence level is at, and people will start buying again. As you can see here, we're back to 2021 price levels, which is great. However, that means a lot of people's pandemic gains have been completely wiped out. We're down 6.5% year over year. So this January compared to 2025's January. But our home price index, the benchmark, that's down 8%. And now 97% of listings are being sold under their listing value. I don't take this information with too much value. It could give you a picture of the general trend. However, most of the time it just comes down to sellers or their realtors pricing incorrectly. I like to look at the month-over-month data. It gives me a bit of a closer picture of what's going on right now, and it's pretty staggering. We've had double the amount of new listings in January compared to last month in December. I think last month in December was around 5,000. This January alone, there's been 10,000 new listings. Total sales last month, I believe it was around 3,600. This month we're at 3,000. That's like a 16% decrease. So we're getting way more listings, but we're actually getting less purchases. And the average price came down 3%. So we were just over $1 million in December, and now we're in January, we're at 973,000. So a big portion though with why these numbers are down so much is because of condos. When we do these reports, it does include condos as well as detached, semi-detached, and townhomes. And so a big portion of the losses are coming from the GTA. Condos are down like 14% in the GTA, and they're still down in Toronto a lot, don't get me wrong, but it's something more like 8%. And Toronto as a whole is holding up a little bit better than the rest of the GTA. I think semis are only down about 0.9% in terms of their average sale price. Meanwhile, in the GTA for townhomes, they're down 14%. I'll have those numbers up on the screen here so you could see what I'm talking about. Now, when it comes to mortgage rates, we're at a pretty good position here. I know they held the rates in January. The overnight rate is still 2.25%. So I took a look at Rate Hub and I could see what the best 5-year variable and fixed was at the time of recording. And for 5 years fixed, we're at 3.84. For the variable, 3.35. Those are solid numbers. However, there was another study that came out by Treb saying that there's a disparity between renting and getting a mortgage for the average sale price right now of about $600. So renters are still saving on average $600 per month, and that's what's holding them back from moving into becoming owners. So we have another quote here by Daniel Falk. He says that sales are falling faster than listings, and that matters. It tells us buyers are retreating faster than sellers are withdrawing supply. The result is rising inventory, growing imbalance, and a market that remains firmly tilted against sellers. Basically, what this boils down to is we are getting so many new listings without anybody buying them. It's about that time right now where I like to break down what this report means or could mean for potential buyers, sellers, investors, and renters. And if you're a buyer right now, this is the best market you've had a chance to enter in over a decade. And I don't say that lightly. We're at 2021 levels when you factor in inflation and whatnot. Now, however, a lot of people aren't confident because they still feel like the market is going down. But if you need a home right now, don't let that stop you. Go out and get the home you actually need. If you could afford to just wait on the sidelines or whatever, I would suggest you wait another 4 or 5 months. Obviously, with all these new listings, you have the world is your oyster. You could probably go and find whichever home you're looking for right now. And while you're doing so, you don't even have to rush because the average days on market is like 45 days or something like that. You don't have to go and think, oh no, that house I really like is going to be gone tomorrow. You could go look at that house and then go find 5 other ones next week, and that house that you liked originally will probably still be there. Not to mention all the negotiating power you have now. A seller they're backed up into a corner here. Now, I don't mean that you can go and just offer $200,000 below asking price. You still have to, give a pretty fair market value, but the ball is in your court. And for my sellers here, I mean, the advice here is pretty much the same as in my last report. You have to price realistically. And what I mean by realistically is even today's market value price is probably not going to get your home sold. You kind of have to think a month or 2 ahead for when that deal is going to close, because that's kind of the gap, the difference that buyers are looking for at the moment. And just be patient and stay flexible with whatever offers that you get. They might not be what you're looking for exactly, but maybe you guys can negotiate something to work something out that benefits everybody. And for my renters out there right now, if your lease deal is coming up, it might be time to renegotiate in your favor. You might be able to knock off another $25 or $50 per month, especially if you're in the 905 area. Toronto is still holding a little bit better, but I'm still seeing, prices coming down everywhere I go. And if you're an investor looking to purchase something, I suggest you focus more on the end user here. If you're looking to buy a condo as an investment, don't go buy that studio that nobody's going to want to live in or rent out a year from now, or even right now, especially. Maybe you want to go and purchase something where a whole family can live. And you have to be in it for the long haul right now. You can't be one of those flippers at the moment. No one's going to see that you just purchased, a complete cut house and then redid the floors with some cheap vinyl and painted the walls gray and want to pay you an extra $300,000 for that. Those days are kind of gone right now. So like I said, focus more on the end user. So a little prediction of where we're headed, and take this with a grain of salt. I don't have a crystal ball. Certainly nobody does, right? Or everybody would be a millionaire right now. I do think for the next few months, we are probably going to continue to trend down. I would say February for sure. March, you know, there might be that small pickup. March, though, you could probably expect way more listings to come up on the market. As you know, and I don't blame sellers for doing this or for anyone giving the advice to do this, because historically, March is a peak in the market. I think this time in March, though, we're actually going to see an explosion of inventory as everyone's doing this as well. And then, you know, hopefully things start to balance out maybe midway through the year, 3/4 into the year. But that's only if the economic confidence improves, you know, things going on at the government level, at the job level. And, you know, there was some positive outlook shed on that with respect to EV manufacturing in Canada and the EV rebates and trying to get that ball rolling again. So before we get into the key takeaways, I just want to remind you guys to please hit that subscribe button. Helps me a lot. If you could hit the like button as well, that boosts out the video to a bunch more people. Would really appreciate that. But okay, the key takeaways. Like we said earlier, many times confidence is now currency. Economic confidence, not mortgage rates, is now the primary barrier to market entry. And if you couldn't already tell from all this information, we are clearly in a buyer's market. So if you do need a home, go out there, shop with confidence. If you're in the market for it, shop with confidence that you don't have to feel rushed. You could take your time to find what you need. That's it for today's video, everybody. Thanks for watching. Thanks for tuning in. Really appreciate you guys. Go out there, having a great weekend, and I'll catch you in the next one.